Welcome back. This is lecture 3 and the last lecture of residential status for CMA Intermediate December 2022 attempt. Okay. Finance Act applicable is Finance Act 2021. Right. So we'll just go to where we left. We had finished this problem last time, right? So now we are going to talk about income received in India. Okay. See, earlier we talked about two things. Here, if you see, income accrued or deemed to be accrued, income received or deemed to be received. Okay. So now we are going to see the explanation of this. What comes under deemed to be accrued, what comes under deemed to be received and all that. Okay. So those explanations we are going to take up now. So first we'll talk about income received in India. Okay. So here it is a place where the person is getting the money on the first occasion. Okay. Here you can see on the first occasion under his control. Okay. If that is India, then it is income received in India. Okay. So meaning of first occasion is it should not be that your salary or something has been credited outside India and then you have sent to India. See, even the same day doesn't matter. Okay. It's not that it is from the subsequent day. Okay. It's not like that. Even same day is immaterial. Okay. So once it is credited to your salary account directly outside India, then you send. Even after 1 hour, you are sending to India. Okay. This will be called as remittance. Remittance. Okay. It is not taxable even to ordinarily resident OR. Okay, so what is income received in India? That's what they have decided. That's what they have defined. The recipient is getting the money on first occasion. Okay, that's when first hand when it got credited in his name. Okay, and which was in his control. That is in India. Then it is income received in India. Okay, so receipt is different from remittance, which I just showed you. Okay, so if it is income is received outside India, okay, then any subsequent remittance is not receipt in India. So here I told you for subsequent remittance, it doesn't mean that we are talking of the next month, not even of the next day. Once it has been credited in your name, okay, once credited, immediately after that, if we are sending, okay, send to India now, credited, say this is outside India, okay. Now you are immediately sending it to your parents or whatever, okay. Immediately afterwards, remit to India. It is not income. Not income basically is, okay, it is not said to be income received in India, right? It is not about next day or next month, okay, in case you have that doubt, right? So now here there is an example, we'll see. Mr. X is a non-resident, is received dividend from an Italian company in Japan on 15th December. Okay, received in Japan, dividend. Okay, and after 2 days, he remitted such income to India, right? So it is not taxable clearly as what we have discussed. So that is the only thing you should be concerned about, income received in India. All this point is not very much important. Just remember that if on the first occasion in your control you have received it somewhere else and then you are sending even after 10 minutes, that will be a remittance, not a receipt. Okay, right? So this is okay, this is just a case law, right? So this was a decided case, that's what I'm telling you. Okay, now this was the case of a seafarer, a non-resident sailor. Okay, he rendered service outside India. What did he do? He rendered service outside India on a foreign going ship. Okay, so now it's immaterial whether it has Indian flag or foreign flag. Okay, it is a foreign going ship, and the person is non-resident, and he has rendered service outside India. So in this case, what was decided is, okay, even if the amount has been credited in the NRE account. Now non-residents, they maintain two accounts. One is called as NRE account, another one is called as NRO account. Okay, NRE is non-resident external, NRO is non-resident ordinary. So NRE account, when a person is working outside India, say when a NRI, so is working outside India. So for Indian purpose, he has two accounts. One is called NRE, okay, and one is called NRO, non-resident ordinary, non-resident external. Okay, so all is foreign income. Foreign income is parked in this account. Okay, and all is Indian income is parked in this account basically for ease of taxation. So these are the two kinds of accounts any NRI holds. Okay, or even if the person is not NRI. Okay, these can be the two different types of accounts based on classification of income as foreign and Indian income. Okay, so here, so for this seafarer, what happened is his amount got credited in NRE account. Okay, so what was said in this case, only thing you need which is relevant to you is this was not deemed to be income received in India. Why? Because services were rendered outside India. It was a foreign going ship. There is no connection with India. Okay, only because his amount was credited in NRE account doesn't mean that it is received in India. Okay, that is the only thing decided here. So whatever I've underlined in red here, that is the only relevant point for you. Okay, this is just a case law. Okay, so
Sir,
what did we discuss?
sir, I have doubt, sir.
Yes, Kanagraj.
If suppose amount credited in NRO account means,
Yes, please repeat.
sir, if suppose that amount credited in NRE account maintained in India, if suppose amount credited in NRO
And
account,
it cannot be credited in NRO because NRO is not for foreign income. We are talking about foreign income here.
okay.
NRO is Indian income. Okay.
Okay.
So, right. So here what we talked about is income received in India. Okay. That was the first point there. Next is income deemed to be received in India. Okay. In our table, we had seen second thing was income deemed to be received in India. Okay. It is taxable for all SSEs, as you all know, right? So now what are the things which will come? The first thing is about provident fund. Okay, so we are going to talk about provident fund in detail in salaries. Okay, we have a full section about provident fund. In your salaries chapter, we'll talk in detail. I'll only tell you here the main points of this. Okay, so anything regarding PF, see for RPF or recognized provident fund, okay, employer's contribution in excess of 12% of salary is taxable, interest exceeding 9.5% is taxable. Now, just to be clear that, see, whatever is in excess of this, okay, it has to be brought to tax. Just to be clear here, it has been mentioned that the excess thing is deemed to be received in India, just to remove doubt. Okay, just to make sure that it comes within the purview of taxability. It has been expressly clarified that amount in excess of 12% of salary, okay, which is over the exemption limit, this is deemed to be received in India. That's the only clarification here. Okay, nothing more than that. So our PF discussion in detail, we have a full section on all types of PF. okay, and how the taxability works out and all that. Here we are not talking about taxability of PF. We are only saying that taxable portion of PF is deemed to be received in India. That is the express clarification, just to make sure that it doesn't escape taxability. Okay. Right. So then, of course, this is transferred balance of RPF. So again, as I said, we will take the concept of RPF later. So this is residential status we are taking up right now. Okay. So only thing is, as I said, just remember, taxable portion of PF, any kind of PF, it is deemed to be received in India. In one sentence, you can write the entire paragraph. Okay. Second is contribution made by employer under a pension scheme notified under 80cc Okay. So in this case also, this is a pension scheme notified under 80cc. It's called NPS. Okay. So in this scheme also, if the employer is making any contribution, okay, it is deemed to be received in India. So these are all have been expressly included as deemed to be received, just to make sure that it doesn't escape taxability. Okay, these are newer things. Okay, just to make sure, okay, these things will be deemed to be received in India. Okay, so in future, no one can say that it is not received in India, not deemed to be received in India, so not taxable. Okay. So please put yourself on mute, and you can unmute yourself whenever you're asking a question. Okay. So now, so that is the only thing. Okay. It's not a big thing here. What we are reading is this first part is any excess income of any taxable income of PF deemed to be received in India. Second thing is NPS, employer contribution, is deemed to be received in India. Okay. TDS, any tax which is deducted at source. Okay, TDS is again, it's a separate deduction. Okay, we will be taking this up later. It will come after all your heads of income, your TDS. Okay, so here also only clarification that is made is any amount deducted as TDS, it is deemed to be received in India. That's the only thing. Okay, similarly, here there is something called as deemed profit. We will study deemed profit in PGBP. Basically, it talks about something where, if you have made a deduction for PGBP, let us say you have made a deduction for bad debts. Okay, you have taken deduction for bad debts, it is 100. Now in future, sometime in future, you thought it is bad, so you have made the deduction. But in future, what has happened? That you have received some amount out of it. It happens sometimes, right? You think that you will not get it, but you get it. You have got, say, 20 out of it, out of 100. In any future year, 20 has been received. Now this 20 has no connection with the current year. It is a previous year bad debt. Okay, so just to be clear, it has been mentioned that this will be deemed to be accrued in India. That's all. Okay. So as far as detailed discussion on this, your deemed profit is a separate subtopic for you in PGBP. Okay, there we'll discuss. So this is just one example which I gave you. There are similar, some more related examples are there that also will study in PGBP. So basically things like these are said to be deemed income or deemed profit. Okay, so it is also deemed to be received in India. Last is income from undisclosed sources. So what happens is, like, income from undisclosed sources is taxed at 60%. Okay. Again, this will be dealt with in future. Okay. As I'm telling you here, the entire intention is to see it in relation to residential status and incidence of tax. Only that. Okay. You're not studying the detailed provisions here, anything. So now income from undisclosed sources, 60% of income is taxable. Okay. So if you have got, say, 5 crore income, the income tax department has caught with you. Okay. So now they asked you how, from where did this income come? You don't have any satisfactory explanation. That is called an undisclosed income or income from undisclosed sources. Okay, so if this is done, then flat 60% is taxed. Okay, this is the uh, taxability scheme for undisclosed sources. A problem is you have these undisclosed sources. You have income from undisclosed sources. So we do not know whether some part of this income is Indian, some is foreign. Correct? We do not know. So which is why it is clarified that income from undisclosed sources is deemed to be received in India. It's possible that I have accumulated 5 lakh, 5 crore. Some of it is foreign income also. Correct? It's possible. Now it is undisclosed sources, so you are not able to find out the source. And how would you know whether it is which part is foreign income, Indian income? You cannot know. Correct? So which is why for taxability it was said that it is deemed to be received in India straight up. Okay. So that is the thing. Here it's a very, very small thing. Like what I would like to explain to you is here only thing you have to see is just for the ease of taxation, it has been specifically clarified that these things are deemed to be received in India. So when any of these things come for taxation, okay, you don't have to worry whether it is income received in India or deemed to be received. No, it is all deemed to be received, just for clarity. Okay, this has been mentioned. So here we have completed what? Income received in India, income deemed to be received in India. करेक्ट. ठीक है, तो यहाँ पे ये वाला पॉइंट आपको समझ गया होगा जो मैंने ये बोला इनकम डीम्ड टू बी रिसीव्ड में ये माना जा रहा है कि ये इनकम इंडिया में मिला है. तो यहाँ पे जो ये कोई डिटेल प्रोविजंस नहीं पढ़ रहे हैं हम लोग, सिर्फ ये बता रहे हैं कि इनमें से कोई इनकम आया तो जस्ट फॉर क्लैरिटी इट इज इनकम डीम्ड टू बी रिसीव्ड इन इंडिया just because it doesn't escape taxability. Okay, so now if I take you up again to your incidence of tax table here. Okay, the two things just we needed to know what it is. Correct. One is income accrued or deemed to be accrued. Okay, or received or deemed to be received. Okay, so in this what we have done, received we have seen, deemed to be received we have seen. Okay, so now what is remaining? Income accrued or deemed to be accrued. What comes under this? Okay, that we are going to see now. Then this whole table will get completed. Okay, right. So this is deemed to be received in India. Now this is income deemed to accrue or arise in India. What are the things which are deemed to accrue or arise in India? First, I'll show you those which you very clearly know already. Okay, salary earned in India, it is deemed to accrue or arise in India. Anything which you earn using Indian territory or on Indian territory, it is deemed to accrue or arise in India. Okay, there's no doubt in that. Now, this one point, salary received by Government of India, received from Government of India by an Indian citizen for services rendered outside India. This sentence you will see being repeated many times, at least 5 to 6 times. This sentence will get repeated in various chapters, and I will highlight it at that point of time. Okay, so this is one exception where salary which is received from the Government of India by an Indian citizen, okay, when he is rendering some services outside India, it is deemed to accrue or arise in India. Okay, we consider that it accrues in India. Okay, although he has rendered services outside India, but if he is a Government of India employee, okay, so received from Government of India to an Indian citizen. Okay, right, so it is always deemed to accrue or arise in India. So this one sentence with the same meaning, you will see this in various chapters. Okay, two things cleared now. Now next is dividend paid by an Indian company. So here again, it's not a domestic company. We are talking about only Indian company. If an Indian company is paying dividend even outside India, okay, even if the dividend is paid outside India, it is deemed to accrue or arise in India. Okay, dividend paid by an Indian company. Okay. Now we'll see this income from connection in India. So we will see what is meant by connection in India. Okay, there is a detailed discussion on this one point itself, income from connection in India. Okay, So income from connection in India will always be deemed to accrue or arise in India. Anything which is deemed to accrue or arise in India is taxable in India, correct? So, okay, so we'll see that. So all of these points, so these 8 points, we are going to have some discussion on it. Interest payable by specified person. Okay, so we'll see this. What is who comes under specified person? Okay, some specified people are there. If they are paying interest to some specified people, then that is deemed to accrue in India. Okay, so and then income from royalty, income from technical services, deemed receipt of gift from a non-resident. I've just read this out. Okay, reason being all these 8 points now we are going to have discussion on it. Okay, so all these 8 will not, these 7 will not take too much of time. Okay, time for these 7 together will be equal to time required for this income from business connection in India. Okay, so let's start with this first one, income from connection in India. Okay, so all income accruing or arising whether directly or indirectly. Okay, what is income from connection in India? All income accruing or arising whether directly or indirectly through, okay, all these are through business connection in India. So income from connection in India says it is all income accruing or arising through business connection in India. Second and third is what you already know with your logic. Property, asset, or source of income in India, this will be deemed to accrue or arise in India. We know that. Okay, so that if there is an income from property, asset, okay, say you have a house property in India, you are staying in Bangalore, all your sorry, you are staying in say a foreign country, and all you don't have any other Indian income, still it will be income from connection in India because that property is in India. Okay, income from connection in India means, in other words, it is income accrued in India. Okay, now you already knew, right? Property, asset, or source of income is in India, then it will be deemed to accrue or arise in India. If there is a capital asset like property in India, you are transferring it, then that income will accrue or arise in India, right? So B and C is what we already know, correct? So as I said, in general, just take any property, any income. If it is stationed in India, it is located in India, that property is physically here in India, or that income is earned from a setup which is based in India, that is completely income accrued in India. Okay. So now basically from this point, what we have seen, the point A is what we need to talk about, correct? Business connection in India. So connection in India is what? One, business connection in India. Second, you can say income from any other asset in India in any way, you can say, correct? Straight away. So let's see what is business connection in India. ठीक है, तो ये बात भी समझ में आ गया होगा आपके, जो मैं बोल रहा हूँ ये है, हम देख रहे हैं इनकम फ्रॉम कनेक्शन इन इंडिया क्या होता है। इसके 3 पॉइंट बताया मैंने। बी और सी तो आपको ऑलरेडी मालूम है कि इंडिया में आपका एसेट है, वहां से इनकम आ रहा है, तो हमेशा एक्रो राइज इन इंडिया होगा। बस एक पॉइंट ए अलग बोला है इन्होंने, बिजनेस कनेक्शन इन इंडिया, तो वो हम देखेंगे। ओके, सो लेट्स सी बिजनेस कनेक्शन इन इंडिया। Okay, so income rises outside India because of business professional connection in India is deemed to accrue or arise in India. We already know it is taxable for all, correct? We know that anything which accrues or arises in India, it is taxable for everyone, right? Okay. So here in business connection, there's an income arising out of business or professional connection in India. Okay. So what is business connection? If you have a branch office in India, okay, agent, organization of a non-resident in India, okay, any non-resident, okay, if he has any kind of sub-organization in India, like branch, okay, or even if he has one agent in India, okay, full-time agent, okay, then it will be treated as business or professional connection in India, okay. Then whatever income he will get from India because of that agent or branch, that will be only that part will be deemed to accrue or arise in India, not his other foreign income. Only that income which he is earning out of that particular agent or that particular branch, okay, from India. Okay. A business connection shall include any business activity, okay, carried through a person who acting on behalf of the NR. So here we have further some points here. Okay, very simple, no need to worry. So business connection shall further include business activity carried through a person. So the non-resident is carrying this activity through a person who is acting on behalf of the non-resident, and what is he doing? Okay, has or habitually exercises in India an authority to conclude contracts. So he has the power to conclude contracts. Okay, we'll discuss that in the name of the NR. Okay, for the transfer of, say, ownership right or property, any right of NR. The NR has any right, and this person has the right to talk to someone and final sign on the contract. Okay, is able to conclude the contract. Okay, and for the provision of services by the NR. So basically, because the NR is, say, selling some, let us say for example, he is NR is selling some course. Now people here do not know, so he has appointed an agent. Okay, now that agent is helping him sell his course directly. Okay, so that would come under provision of services by the NR. So such income will be deemed to accrue in India. Okay, so this is one. So again, what did we see here? Business connection includes what includes he habitually exercises in India authority to conclude contracts. By conclude contracts, we are saying that he is not just a small back office employee. Okay, he is someone important. That's what they mean. Okay, second is he maintains in India habitually a stock of goods or merchandise and regularly delivers it on behalf of the NR. So he is the NR, as say for example, NR has given him a stock of, say, 5,000 books. So he concludes the contract and he is delivering the book from here to whoever needs it. He is maintaining a stock of goods. Okay, either is habitually exercising an authority to conclude contracts, okay, in the name of the NR, or is maintaining stock of goods. Small points just you have to remember. Okay, small. And third is habitually secures in India orders for the NR. Is securing order for the NR. Okay, any of these can be there. Okay, so in that case, he will be the income which is arising through this person or agent. This person, through him, whatever income is being generated, okay, that will accrue or arise in India. It will have no impact on the NR's foreign income. Okay, or even NR's other income from India. We are not only talking about whatever income is earning through that Indian connection. Okay, now in these things there is one exception. Okay, very short thing as exception. Okay, so here you can see business through broker, general commission agent, etc. in the ordinary course of business, then that will not constitute business connection. So basically, the broker, even if he is doing through broker, the broker must be working for him directly. Okay, if he's a general broker, is doing many such activities, and one of that is his activity, is not specifically working for his brand or promoting his brand. Okay, in that case, it is not income from Indian connection. So this person here, the person whom we are talking about here, okay, so he should fully work for the non-resident. Otherwise, if he has an agency, he does 50 kind of works for 50 people. One of them is this person. Okay, then it is not business connection in India because he is not specifically promoting his brand, right? Okay, so it will not be business connection. So this is the exception here. Remember, broker who has an independent status. Okay, so then he is not considered as broker of that NR. Okay, broker having independent status. But if he is working only for that NR or works for the group of the NR, only for the NR group, then only this will hold good. Okay, otherwise he is not deemed as broker. Independent broker is not broker for this purpose. Okay, and then so these things, whatever you are learning now, at best it will have a theory value. You can have a short note or something like that. You will not get any question, any problems on this. Okay, no problems, but you can have objective type questions or short notes on this. Okay, so this exception, second point is business activity confined to purchase of goods in India for export. Now, because of export promotion, if the NR is doing something, it is purchasing goods in India and exporting it. We want our goods to be exported. So it's working only for export. Okay, is working only for export. Is purchasing, is not taking the goods back and all, and exporting straight away. Then that person will not be taxable basically. Okay, this is just for export promotion, this exception. Then okay, third is news agency collection of news. So there are two things basically. Journalistic activities is one. Okay, it is for journalistic work. There are lots of exemption. Okay, so here again in this case, so if the NR only works on news collection and it transmits news outside India, okay, then that is not business connection in India, just because the journalistic activity is promoted for free speech. Okay, so this is also an exemption. Okay, news agency is an exemption. And next exception, sorry, not, yeah, same thing more or less. Okay, then next is foreign company engaged in business of mining of diamonds, where it's display of uncut and unassorted diamond. Okay, in any special zone notified by the CG. So you are seeing diamond business. What happens when you mine a diamond? See, it's very costly, as you know. It doesn't get sold straight away. Okay, so it is displayed at several places. Only then it is then finally sold. So that's why here there is a special exemption being given to display only. It is okay, display of uncut and unassorted diamond in any special zone notified. There are specific places where this work is done. Okay, if central government has notified this, then just display will not, you are just displaying it, so we will not take it as business connection in India. Okay, this is only display, not sale. Okay, so and then last one, this is again, you know, similar to your news agency exception. This shooting of cinematography film in India. So like journalistic work is exempted. Similarly, production of film is also exempted. Okay, so here the only condition is shooting a movie in India. The NR is an individual, not a citizen of India. Okay, he should not be a citizen of India. If the NR is a firm, then no partner should be citizen or resident in India. And if the NR is a company, then no shareholder should be citizen or resident in India. So it's pure, it should be pure non-resident basically. No relation to India. If such people have come to India and they are shooting any film, okay, then it is not deemed as connection in India. So these are your 5 exceptions of business connection in India. Okay, very simple. Okay, 5 exceptions of business connection. One is activity through a broker. Okay, second, if he's purchasing goods and exporting. Third, collection of news. Fourth, diamond. And third is shooting of movies. That's fifth is shooting of movies. That's all. Okay, so here also you don't need all those details. Okay, whatever details are there, everything you don't need. Just in a general way you should be able to write. Okay. You should have a general idea of it. Okay, these 5 are the exceptions. That's it. Right? Okay, note, if not having significant economic presence in India, okay, so we will see what there was nothing called significant economic presence before. Okay, this term was introduced in 2018, significant economic presence in India. So before that, this term itself was not there. Okay, so here we'll see what that is. And if not having significant economic presence and all operations are not carried out in India, okay, then income which is accruing or arising in India equals to part of income of the operations in India. So what they are saying is, if that entity doesn't have significant economic presence in India, one, okay, entity doesn't have significant economic presence in India. I'll tell you what that is. Significant economic presence, will come to it. Okay, and all operations are not carried out in India. That is, it doesn't have significant economic presence, and only 10% operations are in India. Okay, 10%. 90% are not in India. So what is deemed to accrue or arise in India will only be relevant to this 10%. That's what they are saying in short. Okay, there's too much of too many words used and all. What it is saying is, if you do not have significant economic presence in India and only, let's say, 10% of your operations, okay, are carried out in India, then income related to that 10% only will be treated as accrued or arise in India. That's all. So 10% is an example I'm using. It can be 20%, it can be 2%, 4%. Okay, right? Next is asset, capital asset being share or interest in a company. Okay, so this is you have a capital asset, okay, or any kind of asset, okay, that is share or interest in a foreign company. Share or interest in a foreign company. Okay, you have got some shares or some interest in a foreign company. Okay, so it is deemed to be situated in India when it derives its value substantially from assets located in India. So it is possible that there is a foreign company. Okay, company is a foreign company. Okay, but it has done most of its investments in India. So it is deriving its income from India. Foreign company is deriving its income from India. This is India, let us say. Okay, although it is a foreign company. And now if you have got shares of this company, okay, it will be deemed to be accrued or arise in India. Okay, if that asset gets its value, okay, major part of the value is coming from India. Okay, that's what they are trying to say. It derives its value substantially from assets located in India. Okay, this is not applicable is, okay, this one is this, what we have studied about this capital asset here, it is not applicable if the NR is holding it, okay, by way of investment in category 1 and 2 FPI. Okay, so now FPI is something which is outside your scope. Okay, basically it is foreign portfolio investors regulations, which comes under your securities laws. Okay, so under securities laws, if a person is holding asset under category 1 or category 2 FPI regulations, okay, so in that case, this will not apply to him. Okay, this is just an exemption, that's all, nothing else. Okay, apart from this, you don't need to know all these things, what is a foreign portfolio investor and all that. There are big definitions of all these things. So this comes under an entirely different subject called securities laws. Okay, so just you have to remember only this. This doesn't apply to NR. who has invested in category 1 or 2 of 2 as per FPI regulations. That is enough. Even this 2014 you did not remember. Okay. So that's all. This is a separate exception. Even actually speaking, even if you do not remember this, it's not much of a problem, because in inter you do not have any relation to securities laws. Okay. Okay. So next we'll go ahead. Significant economic presence of an NR in India shall constitute business connection in India. Okay. So of course, we know that it will constitute business connection. And what is significant economic presence? So this is what we are seeing here. Okay. Here, what are we seeing is significant economic presence means. I told you, I'll tell you what significant economic presence is. Okay. This is one important point. Okay. There was this term was not there before. Okay. It was introduced by Finance Act 2018. Was introduced so that to cover some more people under tax ambit. So any transaction in respect of goods, services, or property carried out by an NR, non-resident, with any person in India, including provision of download of data or software in India, if the aggregate payments arising from such transactions during the previous year exceeds the prescribed amount. So here they're saying, okay, in this case, you have a non-resident. Okay. And he has any transaction with a person in India. But here, remember, the main thing here is the NR is based in foreign country, okay, non-resident, and whatever income is receiving, income is also income received in foreign country. Okay, income, he is also in foreign, income is also received in foreign country. Then what we would say normally, it is not taxable in India. Okay, so here only thing is, and then okay, and whatever we have said business connection in India. If business connection is there, if he's an important person, agent or something, then it comes. But here, what about the, say he has some connection, but not a great deal of connection, but there is some person in India, some lower level employee who is helping him get the income. Okay, here. So which is why this condition was added. Okay. So here, so if the transaction with that person, even if that, like whatever we have defined above, that person has to be an important person, correct? Kind of an, here just to include some more people who are not, say, seemingly not in an important position, but they are helping him getting major revenue. That part also we wanted to bring it inside significant economic connection. Getting the point, right? For this, we have done, this was introduced. This is basically this is about the prescribed amount. You don't need actually. Okay. So this is, you don't need to know what amount is prescribed. Okay. I'm just telling you just for the knowledge of it. Okay. But you actually don't need this basically. Okay. So this is prescribed amount is 2 crore rupees actually. Okay. So if a non-resident is doing some work where some Indian has a relation and that turnover is about 2 crore, business of 2 crore is doing, although is not his full-time agent, nothing is there. Still, it will now be brought under purview. This never came into purview earlier. Now with this amendment, it will come into purview. So you just don't worry about this amount. Okay. You just have to say exceeds the prescribed amount. That's all. Okay. So now what has happened? Earlier, under earlier regulations, people who were escaping taxation, now they are also coming within this transaction. So this is one thing which is turnover. Okay, here turnover value is defined. Okay, and second thing is systematic and continuous soliciting of business activities or engaging in interaction with such number of users in India as may be prescribed. If that person is uh, engaging many users in India, like in by YouTube, you have got YouTube, many other things nowadays, wherever people are selling products through internet. Okay, so if he is soliciting business in India, okay, and uh, with such number of users as may be prescribed. Okay, so here also what is prescribed is 3 lakh users. Okay, 3 lakh users. So if you are sending your ad and all to over 3 lakh users, then you will be brought to tax. That part will be brought to tax. Otherwise not. Okay. So these two limits have been prescribed now. This is as per the rules. As for you, you don't need these figures. Okay, for your exam and all. You only need that for significant economic presence, transaction for goods, services, etc. carried by an NR. Okay. If the aggregate of payment arising from such transactions, basically they are talking about turnover. Okay. Aggregate of payment arising means turnover. Okay. If exceeds the prescribed amount. In short, you can write. Okay. A transaction in relating to goods, services, property. Okay. Where aggregate payment exceeds prescribed amount. That's it. Second is you can say um, engaging in interaction with such number of users as prescribed. That is sufficient for you. Okay. So these two things have been added from 2018 actually. And because of this, the tax ambit has increased. That's all. Okay. So the reason being, these are those people, as I said, who are neither Indian and they are receiving income in foreign. So that as it is, they are being excluded. Only way we could have brought them in tax ambit was under business connection definition. But under that also, that person will not qualify. Okay, because he is not a full-time agent. So now this has been added. Okay, understood? Okay, for significant economic presence in India, it is not necessary that agreement is entered in India. Okay, NR as residence or place of business in India, no need. Okay, and that he renders services in India. This is all not needed because this is basically for people who won't even come here. You're getting the point? Yeah, they're just using one or two people here, some connection here and getting income. They are not even going to come here. Okay. And only that much income as this much we know, like whatever income he has earned out of that, these transactions, as I said, for example, 3 lakh users, 3.5 lakh users, let us say, whatever income he has earned from that users, only that much will be taxable. That will be income arising from India, not his other income that we have already talked about. Okay, that's what they're saying here, right? And then so this is little, it's this part which I'm teaching you right now, it's a little complex. Okay. So because it's little deep legal language. Okay. Which is why it is this thing. So as far as importance is concerned, you will not get any problems and all from this, but there can be some theory. So which is why you don't have to write exactly like that. Okay. But overall, you should know this, what it is. The second is saying income attributable to the operations carried out in India shall include income from advertisement targeting customer in India who accesses the advertisement through internet protocol access in address in India. Okay. So basically whenever he is hitting an Indian IP address, internet protocol is what? IP address. Okay. So while finding out how much of his income should be taxable, you will see that whatever income is generated from Indian IP address or Indian advertisement. Okay, only that part. Right, the same, it is repetition. And second is sale of data collected from a person who resides in India. So data has been, see, nothing is in India. Everything, all income is outside India. NR is staying outside India. Data has been collected, but some data he has collected from a person in India. Okay, or through IP address in India. Only he has collected some data and he's used that data to generate income. Okay, so even that part will come in purview. Okay, and this one is sale of data. Basically, he has taken the data and sold the data directly. And this one is he has used the data, collected data and has used to generate income. So basically, all these are similar things. Okay, specifically, you don't need to focus on this because this comes already. It has come under the previous paragraph. Okay, so just only remember is it should be from an IP address located in India. Okay. So this point is not that important for eligible investment fund. Fund management activity through an eligible fund manager does not constitute business connection in India. Okay. So here there are some mutual, this is based on some mutual fund. Okay. And there is an eligibility list. Okay. A government eligibility list. Certain number of funds have been added to that. If this fund is one among those funds, okay, then it will not constitute business connection. So basically, it is an exemption provided by the government to some mutual funds. Okay, if it is a eligible investment fund, okay, it's kind of mutual fund. Okay, so wherever the government has specified that these mutual funds, if there is transaction with these mutual funds, it is not business connection, that will be excluded. Okay, so that's all till here. You know, your that part is over now. It's little tough part, I understand, because you can just go through the lecture one or two times, you will understand it well. Okay, so mostly not everyone goes through this part in that detail. Okay, but just because you should know everything from residential status, I'm taking you through this part as well. Okay, so right, next is income from property, assets, or source of income in India. Okay. We know that it deems to accrue or arise in India. Whatever kind of property deems accrues or arise in India, right? Nothing is there now, nothing. Now, salary payable for salary earned in India, basically. Okay, for services rendered in India, it accrues or arise in India. You don't even need to write it. They are saying leave period preceding and succeeding such service period. Sometimes when you quit a service, okay, today I am quitting the service, but today I'll stop working. But I have taken leave some days here and some days here. But my last working date is here. So leave period basically preceding and succeeding. Okay, it will form part of employment. That's all. There is nothing in that. Okay. So salaries earned in India, basically that much you need, nothing else here. Income from property assets in India, we know that. Okay. And salary payable by government of India to Indian citizen for services rendered outside India. I told you, we'll see this many times. Again, here itself, we have seen it. Okay, it always is deemed to accrue or arise in India. Remember that allowance and perquisites paid by government to citizen of India for services rendered outside India is exempted. Okay, this is exempted, allowance and perquisite, but salary is deemed to accrue or arise in India and is taxable. Okay. Next part is dividend. Almost little bit is there. Okay, we are almost at the end, so that's why I'm not giving you a break, and then I'll give you a break as soon as we complete it. Okay. Income from dividend paid by an Indian company outside India. By an Indian company outside India, it is deemed to accrue or arise in India. We've already seen this actually. Okay. Now, these are last few things. Now, this is income from interest. Okay. So, what kind of interest is this? Interest payable to non-resident is deemed to accrue or arise in India when you are paying interest to non-resident. Okay. So, if you see this here, okay. So, this is interest payable by. Payable by, you can see this arrow here. So this is interest payable by basically the government, by any resident, by a non-resident. Interest is payable by these three. Okay. The first thing is interest is payable by government to here what I've written is to NR. In all these three cases, the interest is being paid to NR, payable by these three people. Okay. So interest payable by government, okay, to an NR will always be deemed to accrue or arise in India. 1 point clear. Okay, straightforward. Interest payable by a resident person to non-resident. Indian resident is paying to non-resident. Okay. It is deemed to accrue or arise in India. All these three. So it is deemed to accrue or arise in India if the money, so he's paying interest. So that means he's borrowed some money. That's why he's paying interest. Correct. Why is he paying interest to NR? He must have borrowed some money. That's why he's paying interest. So money borrowed is not used for business or profession carried on outside India, earning any income from any source outside India. In this case, it is deemed to accrue or arise in India. You understand why they have mentioned this? Because money borrowed is not used. Because if money borrowed is used, if you say money borrowed is used here, then what has happened? He has taken loan from non-resident and he's using that money also outside India. Then there is no connection in India as such. Okay, that's why it is not deemed to accrue or arise in India. So if the resident person is paying interest to non-resident, there are only these two conditions when it is deemed to accrue or arise in India. Money borrowed is not used for business carried on outside India or earning income outside India. Okay. Then it will be deemed to accrue or arise in India. Last thing is non-resident. Now just think of that. He's a non-resident, is paying to non-resident, non-resident to non-resident. Chances of it being taxable in India is very remote. That's why it is taxable only when such money borrowed is used for business or profession carried on in India. If this non-resident is using it for business in India, only then it is taxable. Otherwise, it's not taxable for anything. Okay. If used for earning income from any other source in India. Okay. So this is only for business, it is taxable. But if it's using to earn income from any other source in India, then interest doesn't deem to accrue or arise in India. Okay. Then interest is not deemed to accrue or arise in India. Just remember this one point. That's all. Okay, if it is business in India, then the interest which is paying is it will be deemed to accrue or arise in India. The interest which he is paying to him. Okay, but if it is not business, okay, he has borrowed money and is used to invest something in India, let us say, but it is not for business, general investment. Okay, then interest is not deemed to this interest you are talking about is not deemed to accrue or arise in India. There are three more tables. Now, this table, if you know, other three are like cakewalk, same thing. Okay. Here it is interest payable to NR. Here it is royalty payable to NR. Okay. Only the nature of income changes. So otherwise, that's why nothing changes much. Royalty payable by these people. Okay. To NR. Okay. So here, first of all, government always deemed to accrue or arise. Same thing. Okay. By a resident person. Okay. So he's paying royalty here. There he was paying interest. He's paying royalty. That means he has taken some right intangible asset information from the non-resident. Correct. For that he's paying royalty to him. That's why they have said the right information is not used for, okay, business or profession carried outside India, earning any income from any source outside India. Okay, this and earning any income from any source outside India. So if you compare this with your first table, nothing has changed, only the nature of payment has changed. Instead of paying interest, you are paying royalty. Okay, that's all. Nothing has changed. So here also it is exactly the same. Okay, here also it is exact. So first 3 points till here nothing has changed. Okay. Now next is non-resident person. Right must be used for. So right should be used only for business or profession carried in India. This is same. Okay, here earning any income, this also has been included. Okay, there other income, in case of other income, interest was not taxable. Here other income also is taxable. Okay, both are taxable. This is just one line which is different. This one line is, otherwise whole table is the same. Now this table, if you see, same copy paste of this table will be the next table. Exact copy paste. Income from technical service. You would have heard of the term royalty and technical services. Always royalty and technical services, they are not spoken of together, and treatment is also the same. Here he has taken technical services from NR and is paying money for that. Okay. So for government pays, deemed to accrue or arise in India. Resident person pays services must not be utilized for business of profession outside India, income other outside India. Okay, same. There is no change at all. Exactly same. Non-resident must be utilized. Services must be utilized for profession, business or profession in India, earning any other income in India. Same table as the above one. Okay, I don't think we need to talk more about this. Only difference is that was royalty. Okay, that you had bought some intangible assets. Here you have taken some technical services. That's all. Okay. Now after that's it. So we are at the end. This is the last part. See here we are ending it. Okay. The chapter ends. So this part says here deemed receipts of gift. Okay. So now there is a section of gift in income from other sources. Okay, taxability of gift in income from other sources. So that is this section. It talks about gift taxability. Okay, so although this section will be dealt with in income from other sources later on, so here just remember that deemed receipt of gift when a non-resident or a foreign company receives any sum of money, non-resident or foreign company is receiving any gift money. What is gift and all that is a detailed discussion of income from other sources. There will do it. Okay, if he is receiving a gift, for now just remember this, received from a resident person, received outside India, and received on or after this date. Okay, the date has been put because the provision was added from that date. Okay, other than that, otherwise nobody is going to ask you the date as such. Okay, because you will be given in the problem, if at all they ask this question, you will be given a date of 2021 or something like that. So that's why this you will not require. Okay, this use of this date. So no need to learn this date. So then receipt is treated as income deemed to accrue or arise in India. Just remember that if a non-resident or foreign company is receiving a gift from a resident person outside India, then it is deemed to accrue or arise in India. That's it. Don't need anything more than that in this. Okay. So that's it. This is a small illustration which I'll just show you here. Okay. Miss Monica, foreign national, comes India every 90 days since 2005-6. She's coming to India every year since 2005-6. Okay. So determine her residential status for the previous year 21-22. And chalo, we will see these two and then we'll talk about it. Okay. The first case, See, she's coming to India every 19 days from 2005-6. Okay. So here, so that means in the previous year, 2001, 2021-22, she would have been for 90 years as well. And before 4 years also, she would have been there for 90 years. So PY 90 days, 90 days, sorry, not years, sorry, I said years. So PY 90 days and 4 years immediately preceding will be 90 into 4, correct? How much it is? Is it 360 and 4 is 36? So what, how much we needed here? 365 we needed, correct? But it is 360. And the year in previous year, it is only 90 days. So first basic conditions not followed. Second basic conditions also not followed just by 5 days missed. Right? Okay. So non-resident. Clear? Any question? Why non-resident? Understood? Okay. So then next point which they have asked is here. Will your answer differ if she comes for India for 100 days instead of 90 days? See, if the same thing, if this is 100 days now, this becomes 100, this becomes 100 into 4. Okay, so this becomes now 400. So now this 400 comes within 365 days, correct? So in this case, by basic condition 2, she will be resident. Okay, resident is what about ordinarily resident or not ordinarily resident? So we need additional conditions. So we need data for 10 years immediately preceding the previous year. Previous year is 2021-22. 10 years preceding will start from 2011. Okay, 11, 12. Count and see after 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. No, one year earlier. Okay. 2010, 11, correct? Okay. No, I think I was right. So 11, 12 onwards. Basically, see this 2011, just 2011, 12. Okay, so this is our 2021-22 this year. Before this, if we go, okay, 10 years. So these are 10 years, right? So starting from 2011-12, 2011-12 onwards, these are 10 days, 10 years. Understood? So here, so what are the 2 additional conditions now that we require? Can anyone tell me what are the 2 additional conditions?
Immediately preceding 10 years out of 2 years residential.
Okay. 10 should be resident. Next.
732 days in 7 years, last preceding 7 years.
Okay, so now as we saw that the 10th year, it starts from 2011-12, and in this problem, she since 2005-6 is given. Okay, so basically you can just say that every year you have got, each of these year you have got 100 days now. 11 is 11, 12, 12 is 12, 13. Okay, Each of these years, we have got 100 days now. Okay. So like she was resident here, 100 days here, these 4 days, 300. Similarly, go to one previous year, it will be 100 days here and 400 here. So all these years she's going to be resident. Okay. So that 2 out of 10 is easily, you will get it. 2 out of 10. Okay. Please be on mute. And that is one. And what about 730 days during 7 years immediately preceding previous year? See, this is 7, 2, 3, 4, 6, 7 till 2014. Okay, 700 it is there for each date.
Only 700 days, not 730 days. It is coming.
Yes, yes, that is correct. So only 700 days is coming. So which is why what will be his residential status?
Not ordinary residents.
Very good. It is not ordinarily resident. Okay, because only 700 is coming. Okay, which is why it is RNOR. Okay, so that's it. So any questions you have, we can take it. It's I think already 8:16. So we'll not start house property today. We'll start it tomorrow. Okay.
Okay, sir.
And any question? So you should go through this part. It's a little complex part in residential status. If you have any question, you can ask me on WhatsApp as well. Okay. Okay. Thank you. So that's all for now. We're not coming back. It's only 15-14 minutes. Okay. So tomorrow and on Sunday evening, evening also you'll have one class from Shivam for house property problems. Okay. In place of my class, his class will be there on Sunday evening. Okay. So okay. Thank you.